Hey guys, welcome to another episode of Make Money Count. I feel like it's actually been quite a while that I've been on. I mean, the last show you did alone.
Yeah, it was so good.
Yeah, was it? Was it better without me? Today we're going to be talking about the budget that the federal government released. Was it a good or a bad thing?
I would say it is a bad thing, but I think that budgets in general, it's good to understand like what the federal budget is, right? It's an opportunity for the federal government to market what their agenda is and how successful they feel that they have been and who they're pandering to going forward, right? Unfortunately, I think that like if you take the federal budget as a whole, it shows that the federal government is, number one, they're going to spend more money. So we're in this period of high inflation where the Bank of Canada is trying to combat inflation. And the federal government is going to spend another $40 billion in the budget.
Seems like a lot of money.
Yeah. There's some weird stuff where like, they're going to give back GST rebates. They're going to, kind of hand money back to households.
I heard about the grocery thing.
The HST grocery rebate thing. And from my remedial understanding of economics, when you just hand money to people, it is not a tool to fight inflation, let's just say.
Right.
Although it's relatively small amounts of money.
Yeah. It's not $2,000 a month, that's for sure.
It also kind of, it's, what the federal budget reminded me of?
What?
It's like Canada was cheating off of the United States on a test.
Right. Which is generally the case anyways, though.
It's like the United States under Biden, the United States has kind of rolled out these initiatives to focus on clean energy funding. And Canada has very much followed the lead. So like there's a lot of stuff in there for, focus on tax credits and funding for clean energy initiatives. That's all going to be paid for by the taxpayer. Like the banks are going to get hit, insurance companies are going to get hit. There's some tax treatment of dividends that's taking place. Dividends in Canadian companies are going to get taxed differently, which is going to be more tax exposure for banks and insurance companies predominantly. That'll have an impact. Listen, there's going to be more tax to pay for things, and the things that we're going to be paying for are directed for, I almost say equally, clean energy initiatives and, lower income families getting more out of the budget.
Paying for Galen Weston's cash grabbing.
Yeah, I mean, Loblaw has definitely been very profitable through this inflationary period. The part that people will want to know is like, how will the budget impact housing? I think that, also in the budget, it discusses like this massive amount of immigration that's taking place. I just read that we took in the year 2022, we took in 1 million immigrants, right? Over 1 million immigrants.
Wow.
It's interesting that we found that out now. And the budget does try to address the problem in housing supply. So there's money earmarked for increasing affordable housing. But there's nothing really kind of tangible that you can sink your teeth into that it's doing it's going to serve to actually make housing more affordable. Like housing's never been less affordable than it is right now.
Right.
Property values haven't dropped that much, and interest rates have gone up a lot. And those two factors this budget's not addressing, right? I would say the Bank of Canada probably read the budget and they were like, oh, like I'm more spending, right?
Yeah. What are we doing?
We're, I don't think it's going to result in the Bank of Canada having to increase interest rates.
Do the naughty thing?
No, I don't think we're going to see that. That was a bit like, honestly, the bigger story, bigger than this budget, as far as impact to Canadian homeowners is, and unfortunately we weren't able to do a show last week, but during this Silicon Valley Bank crisis, bond yields dropped so significantly. You want to pull up a bond yields chart, Matt? I love my bond yields.
Just give me 1 moment.
So the bond yields dropped so significantly because of Silicon Valley Bank and because of the crisis that occurred, and it's still occurring within the US banking system. And I was really excited to talk about that, actually, more so than talk about the budget.
Right.
And it always kind of ends up like I sit here and then I'm like, oh man, that's what I wanted to talk about.
Right.
But like, do you understand what happened with Silicon Valley Bank?
No, but before you tell me, can I just to have a little anecdote here? I just pictured you as like an old man with like a bond yield wrapped in like a candy thing in your pocket. And you're like, you know how much I love the bond yield. And then you eating a bond yield, however that happens.
Yeah.
Anyways, go on.
I wish. It'd be tasty. So like Silicon Valley Bank. Oh, here we go. Can you tighten it up over the last 3 months? Or no? This is not my preferred instrument to highlight the bond yield, by the way. But anyways, you see that drop there in whatever. Yeah, there you go.
What's the point? It's a point.
Yeah. Huge amount got carved off of bond yields. And the reason why it got carved off is because everybody got so worried that there was this systemic risk inside of these like second tier US banks. It's a really weird thing that happened. So like Silicon Valley Bank,
whom I really never heard of until then.
Oh, really? Okay, so they grew, their deposits grew pretty significantly. So they, as their name indicates, they serve a lot of the kind of tech companies and the venture capitalists in Silicon Valley. And there was so much capital raising, and these companies got so much money over the last 10 years that they were flush with cash, and they had cash deposited with Silicon Valley Bank. And it was, I was reading something, it was like over 6 quarters, the amount of capital, the amount of deposits at Silicon Valley Bank tripled.
That's wild.
Like 60 billion to 180 billion. So massive amount of capital on deposit with Silicon Valley Bank. And they needed to put the capital to work. That's the way a bank works, right? They get deposits. They got to earn a yield on those deposits. So in an effort to make money, right? Banks are profit driven. In an effort to make money, they deployed the capital into what they perceive to be low risk loan markets, right? Low risk bonds. But in a time like what we went through, bonds aren't necessarily low risk. They're low risk because you will be almost certain to receive your principal back, the amount that you invest. But the price of the bond drops in accordance with how high yields are going. So if you buy a bond and the coupon rate, the yield on the bond is 2%, and the Federal Reserve increases interest rates so significantly over the period of time that you're holding the bond, as the yield on the bond increases, the price must fall. So if you're a bank and you intend on holding those bonds until the maturity of the bond, it doesn't really matter.
Right.
But if you're forced to liquidate those bonds in advance of the maturity of the bond, right? You're liquidating, you're selling it at a point when yields are going up where the price of the bond has dropped.
Right.
So if you're Silicon Valley Bank and you got dumped on a whole bunch of money in deposits and you put all this money into bonds, and then those deposit holders were like, we got to get our money back, right? Which was occurring. Well, then you have to liquidate the bonds in order to give the deposit holders their money back. What happened was the difference between what they had purchased, the price they had purchased the bonds at, and what they were selling the bonds for was so significant that it was more than the market capitalization of the bank. It was more than the value of the bank. So imagine that for a second. You've got this entity that is supposed to be protecting people's capital. It takes in a whole bunch of capital. It makes investments with those capital. And it does not have a capital buffer great enough to absorb the difference between what it took the deposits in at and what it just liquidated the investments to pay out the deposit holders.
Right.
So it started out Peter Thiel, who's a venture capitalist. He's claimed to fame is he's a gay guy who is a Republican backer, and he heavily backed Trump.
Okay, so before we talk about Peter Thiel, like we're probably going to get sued by him because he put Gawker out of business.
Did he really?
Yeah,
I
because
love
like
Gawker.
okay, so like Peter Thiel is the guy that
Well, we
paid
didn't say
Hulk
anything wrong.
Hogan. This is the thing. You mentioned Peter. He doesn't get mentioned in the media at all because he paid Hulk Hogan to take down Gawker for the sex videos that got leaked. He literally backed up his whole like legal claim, paid for it all, and now you Google that guy, and that guy comes up with like a blank screen.
I don't know what type of relationship you and Peter have, but I will say this: all I'm saying is, he came out and he was like, all of our portfolio companies, so all the companies that he had backed that used Silicon Valley Bank, he instructed them to take the money out.
Right.
And that created a run on the bank.
Right.
So over a short period of time, word got out, get your money out of Silicon Valley Bank. People started pulling money out of the bank, which meant that they needed to be repaid, which meant that the bank needed to liquidate its investments, which meant that the bank had to sell these things at a loss and pay off all these people. But the last investors in there was going to be nothing left for them. So the FDIC, which is the there's a CDIC in Canada.
Yeah.
Which insures your deposits with the bank, but insures them up to a maximum of $250,000.
Yeah, I heard about this.
So anything over $250,000 is
gone.
Is supposed to be gone.
Yeah.
It was not gone in this case.
Right.
Okay. So they backstopped it. But there's two things that came out of this crisis. The number one thing is and then there was a run on Charles Schwab, and there were First Republican. There were other banks that kind of were next on this hit list, right? What came of it is as soon as it's honestly, it's like my complaint with watching too much CNBC, right? CNBC and BNN Bloomberg, the things that they'll tell you why something happened after it happened. They'll never tell you what's going to happen.
No, of course.
Right?
Well, why would they?
Right. So what happened in this case is as soon as this happened to Silicon Valley Bank, all the analysts started diving into the information. They were like, okay, well, we better figure out who else has exposure in the same way that Silicon Valley Bank had this material exposure. Read who bought a whole bunch of these bonds that have now devalued in price and who might be forced to liquidate those bonds at the reduced price instead of being able to hold them to maturity. And then those people will be at risk. And let's see, is there a possibility that the difference between what they need to pay their deposit holders and what they're going to sell this collection of bonds for, is there a risk of any of these other players that it might exceed the market capitalization of the bank?
Right.
And that's why you saw the knock-on effects.
Right.
So what happened was, number one, it highlighted that if you are trying to make money at one of these second-tier banks,
right,
which is what they're when they're making money, it's fine.
Yeah,
right?
of course.
But then all of a sudden something bad has happened. Well, the FDIC is going to come in and backstop it. FDIC is not taxpayer money, by the way, which is a misconceived notion. It's actually a fund that the banks pay into. So it's not the taxpayer that's footing the bill for it. If the Treasury Department steps in, then it's the taxpayer that's putting the bill for it. It wasn't the taxpayer in this case. the aftermarket solutions that happen when they kind of combine banks with each other and provide loans and backstops and guarantees, that's the taxpayer on the hook for it. But FDIC deciding to fully insure deposits for somebody, that's not the taxpayer.
Right.
So let's just so we know kind of what pocket the money's coming out of. But the first thing it told us was like, capitalism is broken.
Right.
To me, like when I read that first, when I was like, oh my God, like Silicon Valley Bank clearly made some big mistakes, right? Like Silicon Valley Bank, whoever was managing risk forgot that increasing interest rates was going to increase yield on bonds, which would thereby decrease pricing on bonds, which would render assets that they were buying worth less than what they were buying them for.
And who is also probably never going to get a job again.
For sure, they'll get another job, man. Don't worry. This industry, like, they'll pop up somewhere. But we're going to go work at the government.
Yeah.
But
I think that the guy actually worked for Lehman Brothers before that.
Is that a joke?
No, I'm serious. I'm pretty sure that guy, the risk department manager, worked for Lehman Brothers before that.
Well, so think about that. So first of all, capitalism is broken, right? Because this bank was making bad decisions, but when their decisions were making the money, everybody sat back. And then when the decisions caused a problem, we stepped in.
Right.
So what does that tell you? It tells you that like unfettered capitalism works when it's profitable, and when it isn't, your lobbying power allows you to go and get money from the government. Okay. The second problem was people started pulling their money out of all of these second-tier banks and putting their money into the larger American banks. Because the Treasury, the United States government, came out and said, we are going to backstop Silicon Valley Bank deposits, but we won't necessarily do it for another one of these second-tier banks, these smaller banks, because we don't determine them to be too big to fail.
Right.
But we do determine some financial institutions to be too big to fail. I just want to add that that I think it's something like 95% of the deposits in Silicon Valley Bank are over $250,000, where, the big banks, they don't, they're average consumers that are depositing their paychecks. So I think that, big silicon companies are depositing millions of dollars a day. So that was a big thing of,
I don't know if you look at dollar amount as opposed to number of accounts.
Oh,
I think it would be different, because I think if you look at
you're right.
the overall capitalization of the deposits, they're probably larger deposit holders. Like it doesn't matter. Like JP Morgan has got people with bank accounts. Like I remember a while ago, David Tepper, the owner of the Carolina Panthers, the NFL team, is a hedge fund manager that runs a hedge fund called Appaloosa.
Okay.
Apparently, it was suspected he left his ATM receipt somewhere, probably in the Hamptons, and somebody picked it up, and it was like $197 million was in his checking account.
Oh my God.
Pull that up for a second, man.
Yeah, that's crazy.
Pull that up.
That's wild.
David Tepper ATM receipt.
Let me just jump back in. I will say, even though they are the 16th largest bank in America, it's the second biggest bank failure in America. So those numbers kind of goes to show you that there's 15 banks that are bigger, and if they fall too, they're all going to be the second biggest bank failure in America.
It also smacks of this concept that everybody has been talking about. What is it that's going to break? What is going to cause the economy to break? Increasing interest rates so dramatically. It's going to be something. What is it going to be? Well, we just saw one thing, right?
Mm.
And nobody had predicted that.
Right.
Nobody said, oh, it's going to be a problem because there's so many banks that have been gorging themselves on these, bonds. And when the price of these bonds drops, if they're forced to liquidate and sell at that point, if they don't have a long enough time horizon to sell the bonds, they're going to be in trouble.
By the way, we have a podcast where we speak about about bonds and go through the definition of a bond and how bond yields work.
Oh, it's not 197, 99
99 million. It's the same shit.
Capital One Bank. I think that's just the ATM. I don't know if that was necessarily where his bank
Yeah,
account
isn't that
was.
where people get credit cards when their credits shot?
No, it's a
The thing.
prepaid interest on the
Right.
prepaid credit cards.
Yeah,
Yeah, they
yeah.
do those. Yeah. Well, it's great to rebuild credit.
Yeah, it is. It is.
Anyways, it's just funny, right? Because like you've got consumers that are being so careful right now and they're being squeezed. And you've got like our finance minister, Chrystia Freeland, who just released this budget, told Canadians that they should cancel their Netflix subscriptions as a way to kind of batten down the hatches and combat inflation and you know, get ready for a recession. But, and this is in the United States, obviously, but I'm sure, you know, the same, if not more accommodative stimulus would be handed out to a Canadian bank should they fall upon the same trouble. Like, there's no punishment for that, right?
Yeah.
Like, they were trying to make as much money as they could for their shareholders.
Right.
That's why they made a mistake.
Right.
And they made a mistake.
Yeah.
So let me ask you, Marcus, if they had invested it in something else where it wasn't locked in for 5 years, they would have been able to maybe access that capital in an easier way. Like
It's not locked in. It's an open market. They trade.
yeah,
right?
but I mean, so like, but I mean, if they held the bond for the term, they wouldn't have lost any money, but they wouldn't have been able to access the capital for their depositors, right? So they had to liquidate in order to get that capital, right?
Yeah.
Right. So if they were able invested in something that didn't have a term like that, a locked-in term, you know, are these other banks? Are they only investing in bonds? What other markets are these banks investing in where it could affect us like this, or not even affect, or like make this transition easier for them to access that capital?
So the issue in this case is that they were so they didn't diversify out as much as they should have.
Yeah,
They put
yeah.
so much into these bonds. These bonds have maturity dates. At the maturity date of the bond, you get the coupon value of the bond.
Mhm.
You get the face value of the bond. You bought $100 bond, you get the $100 back.
Mhm.
But if the $100 bond has a coupon rate of 2% when it was issued,
Mhm.
and the yields are 6%, well, then the bond on the day that you sell it sells for
No.
$96. $4 of the price of the bond comes off to provide the additional yield to meet the market. Right? So
Yeah.
the bond has a $2 coupon. Right?
Hey, Justin, there is a podcast that you can watch on our.
Listen, it's so if you are forced to liquidate that in advance, you have to sell it in the market, right? If you can hold it until its maturity, it's going to be worth what it's worth. But by holding it until maturity, you also have to subject yourself to just receiving the 2% rate on the coupon, right? So you're buying less money on an annualized basis on the coupon. So it's kind of like, I had this conversation today at lunch with somebody. When you invest in something, you have to have the thesis that you're going to hold it till its maturity.
Mhm.
So why, if you are a bank that is subjected to the whims of your deposit holders and must provide them with the liquidity when they need it, how can you be allowed to lock up this much money when you know that if you need to access it in advance, you're going to be hit with a loss at whatever the prevailing rate in the market is? It's a misstep. It's a mistake that was made, and it should be punished.
Right.
And so, with that being said, like, is that also because of their timing? Like they did it when interest rates were so low through the COVID market, or like if they did it maybe
Yeah,
in
man.
2019, it would have been a different story. Or
Yeah, like a good question. Think about it like this. They were met with over 6 quarters, over 1.5 years. I think it's that they tripled. You got to look that up. Because like I read stuff.
no, you're right. You're right about this. So 160 to 180. You're right.
Sorry?
It went from like 160 to 180.
No, 60.
Oh, 60. Oh,
60
wow.
billion in deposits
Oh,
to
wow, yeah.
180, maybe more, inside of a year and a half. Right? They got a lot of money because these tech startups or whoever were raising capital. So let's say you're the venture capitalist and I started something. you raise capital for me and you dump me $100 million and I'm going to use that $100 million to further my company. I'm going to put it in Silicon Valley Bank.
Mm-hmm.
It's where you bank. It's where I bank. The money goes in. I'm not a banker. I just started a technology company that sells dog bones, and delivers them to people, and dogs can order them online through some type of Neuralink AI that's ingrained in the dog's head, and it's like a treat. Who knows? It's a smart idea, whatever it is. I got $100 million.
It's a pretty good idea.
All I do is manufacture the chips for the dogs to salivate and have a bone delivered to the house. Let's say that's my business. My business is not to manage the risk associated with where my money is held. So I'm not thinking about the FDIC and their $250,000 guarantee.
Yeah.
I just want my money to be somewhere, and I'll let my CFO or my treasurer handle it. And I want to focus on building my product and satisfying whatever my customer wants.
The dog.
Yeah, the dog. It's probably the dog owner because they're paying for it, Justin. Yeah. I don't know what world you live in, but dogs don't actually have money. Anyways, the problem is that they got so much money from all of the Silicon Valley Bank needed to be aware of who their customer was. How about that? They needed to be aware of their customer and their customer's market. Banks always say, we understand you. We know you.
Mm-hmm.
That's what makes us a good bank.
Mm-hmm.
Well, in this case, if Silicon Valley Bank knew who their customer was, it was a tech entrepreneur that just got $100 million, dumped it into Silicon Valley Bank en masse, I would add. Tons of money flowing into this bank from specific users of the bank who Silicon Valley Bank should have understood, who were going to need that capital to fund their businesses.
Mm-hmm.
Silicon Valley Bank should have been watching as the Federal Reserve came out and said, we're going to be increasing rates. They should have thought, how's that going to affect our borrowers?
Mm-hmm.
How's it going to affect our investors, our deposit holders? How's that going to affect our bank? And if you play this out, you should be able, if you're the guy at the helm of this, you should be able to see that credit markets are going to tighten. Venture capital is not going to have the same amount of money to invest in these companies. These companies are going to be burning through their capital. They're going to be needing their capital. It's not going to be sitting there forever.
Mm-hmm.
There should be a model on how long that money was planning on being in that bank for.
Right.
And then when those people started calling on that money, they should have been able to see that. So again, the issue is, and a lot of people have now come out and talked about this, like Ray Dalio, Bridgewater hedge fund manager, genius money market manager.
He's been calling this stuff for years.
And Carl Icahn, right away, he just came out. He's like, listen, this is not my business. But I can tell you that it seems like the market's broken.
Mm-hmm.
The moment that you can say that you didn't do your job properly and, you screwed up and you made a mistake that's so significant, it wiped out the entire market value of your bank, but we'll backstop it.
Yeah, that's a bit messed up.
Yeah. So I think that's like far bigger than the federal budget in Canada. I think the biggest story is how much that banking crisis that only lasted for a week.
Yeah, it's gone now.
Yeah. Impacted bond yields.
Right.
And you saw right away. And then people started coming out and saying well, the probability of a recession is now higher.
Right.
The S&P is still at 4,000, although it did drop to 3,800 over that same period of time. So what this served to do is it highlighted how quickly rates moved as a response to when the market broke.
Mm-hmm.
You got to see, we're in this period right now where everyone is so impacted by interest rates and how high they are. But eventually the interest rates are going to break something.
Mm-hmm.
And when that happens, interest rates are going to fall.
Yeah.
And what we just saw happen was they did break something and they quickly kind of stepped in and sweeped it up. It was the same time that Credit Suisse got brought into UBS, bought, I suppose, but it was a forced marriage backstopped by the Central Bank of Switzerland. But like, it's the same time that all this was going on. There's definitely more happening in banking. And what the result is going to be is less liquidity in banking. Read less money getting lent out, less money available. People are going to get a little bit tighter at that higher banking level, which slows the economy down also. That's already happening. It just expedited it.
Do you think that any Canadian banks are at risk right now?
No. Because Canadian banks have like an unlimited backstop from the Canadian government.
Right.
Seriously,
Right.
it's a complete oligopoly that, you know, don't look at this budget and see that the federal government slapped their hands on a dividend tax. This is nothing, right? Like, the federal government will backstop the Canadian banks forever ad nauseum, right? And at the expense of the Canadian taxpayer. So I don't see it as being a problem. I don't right now see liquidity as being a problem in the Canadian market, but I do see like stuff. Listen, the budget highlights the same agenda that the United States is playing off of, Canada's playing off of.
Right.
Which is like, we're just going to keep spending money to make people happy.
When does it stop?
Honestly, I don't like, how does it finish? Yeah, it's a good question. Like,
should we buy gold?
I mean, gold went up significantly, right? Like,
yeah,
gold popped as soon as this happened. But even gold is like, the price of gold artificially repressed, right? So, play the game, play the gold game, right? Like, it's going to go up, but like, Bitcoin went up, but I mean, Bitcoin's a little different because it's tied to the NASDAQ, and
it just broke 29,000 or something. No,
yeah, I think so.
Yeah,
it means nothing to me. I just read it somewhere.
Yeah,
wanted my to input.
Yeah, well, thanks for the input.
I thought Matt would like it. He usually gets excited about these kind of things.
So yeah, the budget, what did it highlight for us? It highlighted that Canada and the Canadian government has their head so far up their ass that they think that selling us on the idea of continuing to fund clean energy initiatives with our taxpayer dollars is going to win them enough votes to win the next federal election.
Right.
And I think what they're missing is that if something more kind of fundamental breaks in the economy, that will have a greater impact on their ability to get reelected. But they're playing a game, right? They're playing this like woke liberal agenda game that the playbook works until it doesn't work. And when it doesn't work, Donald Trump comes into power.
Yeah.
Neither alternative is good.
No.
Yeah.
I was going to ask you actually if you think that Trump's going to come back. Like, if you think he's going to win next time.
I hope not. But it'd be good to see someone else from the Republican Party, I think.
Yeah,
listen, I don't follow American politics that intensely. I follow the economics of the country. I think that like, I heard something very intelligent the other day. It's like, if you really strip away the platform of the Democratic Party and the Republican Party, you'll see that like the major agenda is the exact same. Right. Like, did the Democrats do anything to stop the might of the American military industrial complex in its full force, go to war and supply weapons in the Ukraine? Did they do anything to stop that? No. And will they do anything to stop bailouts? No. The only thing that they really want is they want Americans to argue over abortion and guns until they're blue in the face or red in the face, and hope that sideshow takes the main stage so that the people in the background can continue donating equal amounts of money to both parties and continue to make as much money as possible, fully insured and backstopped by the taxpayer.
The reason that I asked about this is I was listening to Biden actually speak about the school shooting, which is very unfortunate. But
The press clip where he talked about ice cream in the start of it.
I didn't see that.
Oh man,
I was just talking about guns, right? And I was
You know
like,
the problem
how is
is,
this going to play
if
in?
you read off of a teleprompter and you don't, your brain isn't capable of processing the words that are coming out of your mouth. It's literally just coming from your eyes. I don't know what part of your cortex you'd be using in order to to find a way to not process what you're saying. It just comes out.
Yeah.
Like he was at, when he started talking about it, he was at like some type of small business conference in the White House. And he came out and he started talking about ice cream. And he just like,
I mean, the guy's ancient.
yeah.
They're all ancient.
Listen, I know some very, very spry,
No.
intelligent
Yeah, no.
80-year-olds. That's
Dude.
just not one of them,
Yeah.
right? Like
Yeah.
his brain has decayed. And
When's the last time you watched Bruce Almighty?
how did you pronounce it?
Bruce Almighty?
Yeah, Bruce Almighty.
Oh, yeah, Almighty. And there's a scene where Jim Carrey is making Steve Carell read the teleprompter incorrect. Anyways, that's what I thought.
I think I have seen that.
Yeah. And he's like changing the words on the teleprompter.
Yes.
Yeah,
I've
very
seen that.
funny. Very funny.
So yeah, I mean, like that's the problem there. But I think it's part of a bigger problem. You can't win as an independent in that country.
Mm-hmm.
And it's the major issues will continue. And then the other part of it is like, you get elected for 4 years, a 4-year popularity contest,
Mm-hmm.
right? That's what this budget is.
Mhm.
The budget is an attempt to, like, in the budget, they talk about how they managed to decrease Visa and MasterCard interchange fees. Oh, okay. Thanks.
Did you read the whole thing?
No.
It's like a novel.
Yeah, I read parts of it. Yeah, I should have read the whole thing, but I didn't.
Yeah.
I started and then I was just like, and then you start reading media on it. And depending on what you're reading, they take a different opinion of it.
Yeah.
Right. So you have to kind of look at everything through a lens.
It is kind of crazy though, because I was speaking with Kelsey about this, and we were talking. Who's my wife, by the way? Happy 1-year anniversary. We were talking about they were talking about these grocery tax credits, and they were saying that one set of humans get, I think it's like $233, and then seniors get $234. And I was like, that's so silly. Like, why just $1? And then I was like, these guys really do have a big job, because that extra dollar. I mean, if you not that like say how many senior citizens are there in Canada? 15 million senior citizens, 10 million.
There's only 30 million people in the country, but
No, I know, but like what? No, seriously.
I mean,
There's 37
demographically
million.
speaking.
There's 37 million.
Yeah, it's like 40 million people in Canada.
Yeah. So like say there's 10 million
You might be
old
right.
people, that's $10 million.
Honestly,
That's an extra $10 million.
okay, let's each of us, let's all guess on the number.
over under.
Okay.
Over under.
I'm
on
gonna go
percentage.
I am going to go
And what senior citizen? 65 and over?
9 million. I'm going 9
I'm
million.
going 901.
We're going
You're
closer.
going
to,
over. You're going over 9 million. I'll go under.
No,
9.
no.
$9,001.
First of all, you said 15 million.
I said 15 and then I pulled it back to 10.
Okay.
So
fine.
10 to 15, it was my
So you're
range.
taking 10 to 15.
Yes.
All right. What do I get? 9 to 9-1? And Matt, what are you? Everything below 9 million?
Yeah, I'll be anything below 9 million.
Oh, great. Okay. I love my odds on this. I love my odds on this one.
Okay, so between 77 and 97, the senior population grew from 2 to 3.5 million. In 2017, it was 6.2 million.
I bet you it's close to 9 million now.
Wait.
You know what? If you could get me, why don't you ask ChatGPT? Are you just afraid she's going to come in here and like kill us all because we're less efficient?
Okay, so over the next 20 years, Canada's senior population, those 65 and older, is expected to grow by 68%.
I think it's probably 9 million, guys.
Whatever, $6 million. Well, that was a $6 million decision to give every senior citizen an extra dollar. You know what I mean?
Hey Siri,
That's a big decision.
how many senior citizens live in Canada? A little disappointing.
Why is your Siri Irish?
Because I said it as Irish woman.
Very weird.
It's nice when she speaks to me.
Here's what I found.
Yeah, I like it. I like it, man. Oh man, July 1st, 7.3.
There we go.
10 million's not that far off. I was 70% right.
Dude, for the guy that had the 9 to 9.1 range, that's pretty good.
Yeah, that's true.
Matt thought it was like 100,000.
Yeah. 4 senior citizens in all of Canada. This isn't the 1500s, Matt.
It's under 9 million. That's what it is.
Demographically speaking, though, those senior citizens provide a pretty big opportunity for the federal government to pander and get their votes. And they did that
By
also.
giving them an extra loony.
No, not the loony. Well, think about what are the things in the budget that they probably like. Right? They probably like the idea of the dental getting rolled out. They like the idea of some type of additional funding in healthcare.
Where there's originals for everybody.
Oh, man. Yeah. Or those little bond yield candies you were talking about before. Yeah, listen. The budget was an opportunity to pander to different audiences. I hope that people see through it. I hope so. I mean, because I don't think it's really doing anything to help with what's going on right now. Like, there's additional spending for affordable housing, but how long is that going to take to hit?
Right.
I don't know.
They pulled back on some of that foreign buyer stuff too.
What happened there? Tell me that.
No, I don't know how but they removed the foreign buyer bans on people who are on work permits and raw land and development projects. There's a couple other things that they removed the foreign home buyer ban on. But like that's kind of like here, we'll have all these people immigrate to Canada, but you can't buy a house for a while. You know what I mean? It's kind of weird. So that's nice that they did that at least.
So nice. So, anyways, honestly, I think the bigger impact on Canadians' mortgage rates is definitely what we saw happen with that mini banking crisis. And I think we probably see something else. There'll be more to come. I think that's not the last of what we've seen.
Right.
More and more people are calling for us to be heading into a recession. Less likely that we avoid and go into this so-called soft landing. Real estate values seem to be holding up quite well still.
I mean, I feel like detached homes in Toronto are becoming more expensive.
Really?
They're going up. Yeah.
You're seeing that?
Yes. That is my opinion.
Well,
yeah. My price per square foot in my building has gone up a little bit too. So I just kind of watch that. So, but yeah, I think that.
Well, the problem there is that like builders aren't building right now.
Right.
So we're at a time right now where we've identified that we're going to have this increased demand, but costs to build, although they increase and now they're kind of stabilizing, if not falling off, but the cost of money has increased so much that builders are saying like, I don't want to engage in this idea of building making this massive investment if I'm not sure that the buyer is going to be there at the prices that I'm going to build at. Right? So they've kind of shelved, a lot of the big builders have shelved their development plans right now.
You mean people don't want to spend $1,600 a square foot anymore on a condo?
I mean, they do. Apparently they are still, right?
Yeah, it's crazy.
Yeah, just not at the same level. Yeah. How are you seeing the market? Like, how are you seeing like the borrower?
You know what's funny? This week has actually been kind of listen, it is an interesting conversation when you speak to somebody who is at a 1.99. I was speaking to someone today. They have 1.59% mortgage with RFA, okay, and they're looking to borrow money, right? So, I mean, what's the option? You take 5%, right? But we look at some sort of other financing for you. But that's always a tough conversation, and obviously, I did mention that values I feel like are up lately, but overall they're still down, right? So equity is a bit of a problem, but I feel like this last week people have been getting more excited. I mean, we're starting to see fixed rates dropping already, like right now, right? So, I feel like news about that is getting out, and people are starting to get a little bit more excited about.
Yeah, it could provide
potentially doing something.
Could provide something for the spring market.
Yeah, exactly.
I think what you key in on there, and we're seeing a lot of it in the MIC, is lending to intelligent borrowers who are just saying like, I can't or don't want to hold off on getting this $200,000 that I want to either renovate or invest or to do something with. And when looking at the numbers, it just doesn't make sense for me to break my first mortgage because it is such a good interest rate, and they're borrowing from the MIC.
Right.
They're borrowing from our mortgage fund. And it makes a lot of sense. And we're seeing a lot of great borrowers. We're able to give good rates to them. And it's a perfect solution for this time of the market, especially if we can time the money that we're giving you with the maturity on your first mortgage.
And it's crazy how the delta between some of these things are how close they are, right? Like right now you can go to a bank, like, the red bank, their rates are like 6% basically. And we're lending at, 6.99, something like that.
Yeah.
Right. So, it's a better time than ever to take a look at and be open to something like that. Do you think things would have been different if Silicon Valley Bank had invested in Cannect MIC?
Oh, man. Would have been a perfect match.
Yeah, right?
Yeah, because we got the liquidity.
Yeah.
We're able to pay people out because mortgages mature and we can give them their money. See, there's the difference, right? Like Cannect thinks about its investors, the timeline when they'll want their money back. We think about our borrowers, how long it's going to take for them to repair something in order to be able to pay us our money back. And we make investments in accordance with what we think is happening in the market. Like if I can do it with a mortgage fund in Canada that is like a decimal point on what these guys are dealing with and be responsible, how come they can't?
Yeah.
Doesn't make any sense.
Yeah, I know.
Right? Like we have to be very careful. And when we are very careful, we are rewarded. Right? If we weren't careful, we would have a problem.
Yeah.
Other funds have problems.
Yeah. No,
right?
there is problems.
But because we are careful first of all, if you're investing money with Cannect and you want to invest money for less than 1 year, it's not going to work. Right? It's not fair to the rest of our investors to take money in for less than a 1 year term. Because we don't make enough money on the spread between what we are paying our investors and what we are taking from the borrowers to justify processing a new investor for less than a 1 year term.
Right.
So the first thing we say to our investors is plan on having your money with us for a year. After 1 year, take your money whenever you want.
Yeah.
And the same way we kind of speak to our investors, we speak to our borrowers. We tell our borrowers, there is a plan for you to pay this money back.
Right. Yep.
We need you to follow the plan. And if you can commit to following the plan, we'll give you the money.
Yeah.
That way we can time the exit of the loan. So when, John borrows $200,000 in second position behind his 1.5% 5-year fixed rate mortgage, we know when we're going to get the money back because we know when his first mortgage matures.
Right.
We can time it. We don't need to take undue risk with our capital. That's why we have not lost $1 of capital. It's why in a time like this, when the S&P is frothy at 4,000, you can put your money in Cannect MIC that just spat out a 9% return last month.
Yeah.
You can log into our website for all of our investors and you can see every piece of property that we've lent on. You can see the loan to value adjusted on a monthly basis. You can see where your money is at work and how that money is going to come back.
Right.
I think there's nothing more important than that. It's not in vogue right now to invest in mortgages, and it should be.
Yeah.
It should be. This should be a time where
the
right money managers get more of people's capital.
I was actually speaking with one of my clients yesterday. He sent me a bunch of documents. He sent me all the things that we need to do a mortgage. And then he sent me his investment statements. I won't say who's holding his money. It might sound like Tedward James.
Okay.
Okay. And I was looking at his TFSA statement, and I looked at them in the light of, how can we better help?
We're your TFSA.
Than just yeah. Exactly. How can we better help him than just beating his bank's mortgage rate, right? And he had lost last calendar year $7,000, and his TFSA balance was like 75 grand or something like that. So it's like 10% of his principal. You know what I mean?
I was talking to my father too, because last year when my dad's retired, He's got a company pension, got a company RSPs, and it's all invested. And that started going down last year. And I told him, move your money over to the MIC. He lives now in Florida, and he gives me a call last week, and he says the MIC's the only investment he's never lost $1 on. And that, like, he's telling everybody that's a Canadian down in Florida, and he's told all the rest of the family, and the family's all looking into it now too.
I love that. I had a good time. This was a good podcast, and I missed you. It's been a while since we've been sitting here together. A few months, anyways.
Let's do another one next week.
Let's do it. I'm excited. I'll see you then, and we'll see you guys then.